Thank you for joining me here today. To start off, civil rights groups filed a lawsuit yesterday challenging a new Republican-backed law in Texas that will give state officials broad powers to arrest, prosecute, and deport people who illegally cross the U.S. Mexico border. Here's the report.
On Monday, Texas Governor Greg Abbott signed the law granting powers to state and local law enforcement that were long delegated to the federal government.
The goal of Senate Bill 4 is to stop the tidal wave of illegal entry into Texas.
The law, known as SB 4, will take effect in March and create a new state crime for illegal entry or re-entry into Texas, with penalties ranging from 180 days in jail to 20 years in prison. Texas magistrate judges will be required to order migrants to return to Mexico, with up to 20-year sentences for those who refuse to comply. The lawsuit claims that Texas's bill unlawfully infringes upon the authority of the federal government under the U.S. Constitution to enforce the nation's immigration laws. The groups, led by the American Civil Liberties Union, also said the law illegally bars migrants from applying to the U.S. government for asylum or other humanitarian protections. The legal director of the ACLU's Texas chapter said the law was one of the most extreme immigration enforcement measures taken by a U.S. state. Mexican President Andrés Manuel López Obrador on Tuesday called it inhumane. He said Mexico's foreign ministry is already working to challenge the law and accused Abbott of making such moves for political gain.
Ganar popularidad.
Migrants who cross illegally can already be charged with illegal entry or re-entry under federal laws. Abbott says SB 4 is necessary because of the failure of Democratic President Joe Biden's administration to stem a spike in illegal migration. In the White House press briefing on Tuesday, Press Secretary Karine Jean-Pierre said it was an extreme law that will not make Texas safer.
This is not who we are as a country. This is not who we should be as a country. Communities should not be individually targeted and put into harm's way.
One immigration law expert told Reuters before the lawsuit was filed that the Texas law was vulnerable to legal challenges, citing a 2012 U.S. Supreme Court ruling that said Arizona could not authorize state officials with similar powers. Texas is already embroiled in a series of court cases related to Abbott's efforts to deter and punish illegal border crossings, collectively known as Operation Lone Star.
China and the U.S. saw a easing of bilateral tensions by the end of 2023, but several fault lines that lie ahead could cause a fresh stumble for the relationship in the new year. Let's take a look ahead for 2024.
After a year that brought panic over spy balloons, a fight over semiconductors, and an intensifying military rivalry, China and the United States are ending the year with an uneasy detente, with both Biden and Chinese President Xi Jinping looking to stop a freefall in their countries' relations. But 2024 could bring new turbulence. Here are three problems that could cause a stumble in U.S.-China ties. Taiwan votes in mid-January for its new president and legislature. China considers Taiwan its own territory. Taiwan officials say Beijing has been escalating military maneuvers near the island and pushing a prickly narrative.
There have been very stern warnings from China that this is a war and peace election and that independence for Taiwan would mean war.
Reuters correspondent Anthony Slokowski has been following these events from Beijing. Though increased warnings and military pressure during elections isn't new at all for Taiwan, this time Beijing really dislikes the frontrunner, Democratic Progressive Party Vice President Lai Ching-te and his running mate Xiaobi Kim.
The commentary in China has been pretty negative about the DPP candidature. They have been called colluding villains, I think, the sort of the ruling party ticket and the Independence Double Act.
The U.S. could be drawn in if military tensions escalate in the Taiwan Strait, and there's a precedent for that. In 1996, the U.S. sent an aircraft carrier group to the area in response to China's military exercises and missile tests ahead of voting. The 2024 U.S. presidential election could be even more consequential. Barring last-minute surprises, it will likely be a rematch between Joe Biden and former President Donald Trump. Reuters' U.S. foreign policy editor Don Durfee explains its implications for the U.S.-China relationship.
Trump is less of a fan of traditional American alliances, including NATO and some of the alliances in Asia. If a Trump administration were to mean a pullback from Asia, China would see that in its benefit. On the other hand, Trump was very tough on China during his time, right? He imposed new tariffs, there were arguments about COVID, and the Chinese leadership found it to be a very difficult administration to work with. So there's an argument from analysts that the Chinese might actually prefer Biden because he's more predictable. They feel like they have a partner they can negotiate with.
Semiconductors remain a key issue in the U.S.-China tech rivalry, and the U.S. is expected to beef up export controls designed to prevent China's military from getting its hands on the most advanced semiconductors.
We're going to see another tightening of export controls in the coming fall in 2024. And we've also heard from officials that the U.S. intends to enforce these rules more strictly. So they plan to go after individuals and companies that they might see as violating this.
While China sees this as an effort targeted at their development, it struggles to push back since retaliating against U.S. businesses would only drive away the foreign capital Beijing needs as its economic growth slows. Things may look cordial between Washington and Beijing for now, but that could change unexpectedly in the coming year. From presidential elections in Taiwan and the United States to continued trade fights, there are no shortage of fault lines between the world's two largest economies.
Wall Street extended its rally on Tuesday as last week's dovish policy pivot from the Federal Reserve continued to reverberate, and investors looked ahead to crucial inflation data. Here's a quick recap of markets.
Wall Street extended its rally on Tuesday as last week's dovish comments from the Federal Reserve continued to reverberate across markets. The Dow, S&P 500, and NASDAQ all added between 6 and 0.7%. Broad-based gains boosted all three indexes and nudged the S&P to within 1 percentage point of its all-time closing high reached in January of 2022. If the benchmark index closes above that level, it would confirm it has been in a bull market since bottoming in October of 2022. At the conclusion of its policy meeting last Wednesday, the Fed signaled that it had reached the end of its tightening cycle and opened the door to rate cuts in the coming year. But Sam Stovall, chief investment strategist at CFRA Research, says it may be premature for investors to start celebrating.
I think right now, both the Fed and the market are a little bit apart from one another, and they will have to come closer as the new year progresses. Right now, I think the Fed is saying that there's a possibility that there will be 3 rate cuts in 2024, probably starting in the second quarter, maybe even the middle of the year. But the market seems to be building in the prospect of 4 or more rate cuts in 2024, with the first one coming as early as the end of the first quarter. So I think the market might end up being a bit disappointed because the Fed keeps telling us that they are data dependent, so they'll probably end up being high for longer.
On the economic front, a report from the Commerce Department showed single-family home building surged 18% to a more than 1.5-year high in November. On Thursday, the Commerce Department is expected to release its third and final take on third-quarter GDP, followed Friday by its crucial personal consumption expenditures, or PCE report, the Fed's preferred means of gauging inflation. In company news, Boeing shares rose more than 1% after German airline Lufthansa revealed it ordered 40 737 MAX 8 jets from the plane maker. And shares of Kenvue gained more than 2% following a U.S. court ruling in favor of the consumer health company in a lawsuit over the company's drug Tylenol.
And the U.S. may have lost its undisputed title of champion in manufacturing, which American families have paid the price for. During the COVID-19 pandemic, it highlighted just how reliant the U.S. economy has become on the global supply chain for manufactured goods. This started after World War II when the U.S. shifted focus to R&D while other countries built up their manufacturing. That, along with the 1980s financial crisis and improved technology, led to companies to start developing here but building elsewhere, where labor was cheaper. Since 2000, manufacturing has lost more than a quarter of its jobs. Manufacturing is no longer seen as a viable career, and many have shifted to the white-collar college dream. While manufacturing jobs will unlikely return to their all-time high of nearly 20 million jobs in the 1970s, America is working to boost the industry, especially with semiconductors. President Biden has signed a bill to invest $52 billion into growing a domestic semiconductor industry. And the latest $15 billion acquisition of U.S. Steel by a Japanese company is only one example of an all-American company that's actually not American anymore. For years, international companies have been buying up classic American brands. In 2016, China-based Haier Group became the new owners of GE Appliances, which was founded by legendary American inventor Thomas Edison. Budweiser and its red, white, and blue beer cans date back to the 1800s in American history. Now, it's owned by a European alcohol conglomerate. Meanwhile, Jeep and its siblings Chrysler and Dodge are now also European-owned. And as well, Ben & Jerry's ice cream brand, which started in a Vermont gas station, is now part of a British conglomerate. And now let's talk about electrification of cars. Sales of electric cars in the European Union were almost half of all new passenger car registrations in the EU. This is between January and November 2023. And it has already crossed the halfway mark in the month of November alone. Here's the data.
Electric vehicle sales have sped up in the EU. Sales of electric cars were almost half of all new passenger car registrations between January and November this year. The data was released by the European Automobile Manufacturers Association, or ACEA, on Wednesday. It showed electrified vehicles made up more than 47.6% of all new passenger car registrations in the EU as of November, up from 43% in the same period last year. Registrations of fully electric cars rose 16.4% from a year earlier to 144,378 vehicles. That was despite a drop of more than a fifth in Germany, Europe's biggest EV market. Both Volkswagen and Renault registrations rose in November. Tesla recorded a jump of almost 45% in the same month, making up nearly 22% of fully electric car registrations in the EU. However, some car makers and analysts have warned EV demand has slowed over past months. Volkswagen said in October demand for EVs was not developing as expected, and Mercedes-Benz warned of a brutal EV market of heavy price cuts and supply chain issues. The ACEA also had a warning earlier this month. It said Europe's EV sector risked falling behind other regions without a strong EU industrial strategy. It pointed towards China's dominance of the supply chain and US incentives for its automakers.
Defense Secretary Lloyd Austin on Tuesday said the United States was leading a multinational operation to safeguard commerce in the Red Sea, as attacks by Iran-backed Yemeni Houthi militants forced more major shipping companies to reroute. Here's more.
Defense Secretary Lloyd Austin said on Tuesday the United States was launching a multinational operation to safeguard commerce in the Red Sea from Houthi militant attacks. That's as incidents involving the Iran-backed Yemeni group increased, forcing more major shipping companies to reroute. While on a trip to Bahrain, home to the U.S. Navy's headquarters in the Middle East.
So this morning, we've launched Operation Prosperity Guardian.
Austin met with ministers from more than 40 nations. He called on them to contribute as he condemned reckless Houthi actions.
That operation is bringing together more than a dozen countries from around the world to conduct joint patrols in the Red Sea and the Gulf of Aden.
Austin said the United Kingdom, Bahrain, Canada, France, Italy, the Netherlands, Norway, the Seychelles and Spain were among nations involved in the security operation. The missile and drone attacks began last month against international vessels sailing through the Red Sea in response to Israel's assault on the Gaza Strip. The Houthis doubled down after Austin's Tuesday announcement, saying they would not be deterred by the US-led security initiative. Shipping companies continued to reroute on Tuesday despite Austin's comments, though many other vessels continued to ply the waterway, with LSEG data showing that several ships have armed guards on board. Austin's remarks leave many questions unanswered, including which other countries are willing to do what mostly US warships have done in recent days, shoot down Houthi missiles and drones, and rush to the aid of commercial ships under attack. This week's assaults forced oil major BP to pause all Red Sea transits, a move that showed that the crisis was broadening to include energy shipments. Crude oil prices rose based on those concerns on Monday. A slew of freight firms, including Denmark's Maersk, started diverting shipments, saying it would sail its ships around Africa until further notice. It's added days to journey times and incurred higher costs. British maritime security firm Ambry said on Tuesday it had received information of a potential boarding attempt not far from Yemen's Aden port city. It added that the attack was unsuccessful and all crew were safe. Industry sources say the impact on global trade depends on how long the crisis persists, but insurance premiums and longer routes would be immediate burdens. Israel's 10-week-old war with Hamas, the Palestinian group that controls Gaza, has increasingly drawn the United States and its allies on the side of Israel. Iran and its Arab proxy forces take the side of Hamas, risking a wider regional conflict. Hamas killed 1,200 Israelis in an October 7th attack, sparking a devastating Israeli assault on Gaza that's killed more than 19,000 Palestinians.
In the search for unbeatable deals on personal items and gifts, thrifty shoppers are flocking to the Chinese Teemu app. However, this money-saving platform comes with a cautionary tale. The app's tempting offers might trick unsuspecting buyers into buying subpar products, or worse, splurging on knockoff replicas disguised as high-end brand name items. Brace yourselves for potential pitfalls in the pursuit of pocket-friendly purchases. NTD's Sean Marshall has more.
Teemu, cheap stuff, but sometimes extremely questionable product quality. On the platform, there's also plenty of replica products with ads and designs that are similar to product brand name products. Electronics like these look like Sony PlayStation 5s, Apple Watches, and fake iPods could easily be mistaken by an unsuspecting buyer or gift-giving parent looking for a deal on a gift for their child. There are a number of videos on the internet reviewing these replica products, comparing them to the original, like this Apple Watch replica that a reviewer said has better display quality than the real Apple, which isn't often the case in these types of reviews. To verify, I ordered some fake iPods to test them out, to check out the quality. My suspicions were quickly confirmed. The quality was not good. One of them was covered with scratches and appeared to have been used or dropped. The sound is pretty bad also. As much as is to be expected of a $3 pair of headphones, just remember the old saying, you get what you pay for. Sean Marshall, NTD News.
And Toshiba was delisted on Wednesday after 74 years on the Tokyo Exchange following a decade of upheaval and scandal that brought down one of Japan's biggest brands and ushered in a buyout and an uncertain future. Here's the story.
It was a stalwart of the Tokyo Stock Exchange for 74 years, but Wednesday saw Toshiba shares delisted following a buyout by investors. That came after a decade of upheaval and scandal that brought chaos to one of Japan's biggest brands. It's now owned by a group led by private equity firm Japan Industrial Partners. Other members include financial services firm Orix and chipmaker Rome. The $14 billion takeover puts Toshiba back in Japanese hands after years of battles with overseas activist investors. That had paralyzed the giant conglomerate, which makes everything from batteries to robots and nuclear power stations. Now it's very unclear what shape the firm will take under its new owners. But analysts bet Chief Executive Taro Shimada, who is staying on, will focus on high-margin digital services. Toshiba is widely expected to start divesting some assets. It's also teamed up with Rome to invest billions in new chip production capabilities. One Toshiba watcher said the firm could have a bright future if it got rid of its low-margin units and freed up its engineers to innovate.
FedEx cut its full-year revenue forecast and reported quarterly profit that fell far short of analyst expectations on Tuesday. And it sent its shares tumbling 9.8% as its largest express business saw demand from the U.S. Postal Service drop. Take a look.
FedEx shares tumbled in after-hours trade Tuesday. They fell close to 10% after the delivery firm cut its outlook for the year and reported profits that fell far short of estimates. Adjusted earnings for the quarter to the end of November did actually jump by 23% to just over $1 billion, but analysts had expected much better. The company said future earnings would be pressured by a volatile global economy, which was sapping customer demand. It now expects full-year revenue to decline by a low single-digit percentage, when it had previously said results would be roughly flat. The company's air-based Express unit was a big drag over the latest quarter. Operating income there dropped 60%, partly as the U.S. Postal Service shifted more packages to lower-cost ground transportation. FedEx is now trying to renegotiate its contract with the post office. The company's own ground division did much better, moving goods for Walmart and others. Income there rose by more than a half. But the overall numbers left traders disappointed and added to signs that the coming holiday season could prove lackluster for retailers and shippers alike. Shares in FedEx arch-rival UPS also fell following Tuesday's news.
Your holiday dinner costs can add up quickly, but with a bit of planning, you can still host an unforgettable feast without going over budget. Here's 5 tips to have a frugal yet festive holiday dinner.
'Tis that time again. Let the holiday feasting begin. But be mindful to avoid a holiday hangover when it comes to your spending.
Many of us overspend during the holiday season because we don't go into the holiday season with any kind of spending plan at all.
According to a survey by the National Retail Federation, consumers celebrating the winter holidays are budgeting more than $250 on seasonal food, candy, and decor alone. If you're hosting, Jessica Allen from Living Well Spending Well has these 5 holiday money-saving tips. 1. Decide on a holiday budget.
This is the amount of money that we're going to spend. And then from there, you can start portioning out that budget into different categories.
2. Pare down the dinner. Reevaluate the menu for the celebration and make changes to trim costs.
Is there a tradition that you tend to spend money and time on that gives you stress and anxiety rather than peace and fulfillment and joy? Just because you've done something before doesn't mean that you have to do it again.
3. Go potluck. Consider asking your guests to bring side dishes or desserts to spread the cost. 4. Start buying dinner ingredients early to avoid last-minute impulsive purchases.
You're going to enjoy your holiday season so much more if you can do the prep work early and ahead of time.
And finally, when it comes to decor, keep it simple and reuse items.
Repurpose, repurpose, repurpose. Use what you have.
U.S. single-family home building surged to more than a 1.5-year high in November and could gain further momentum with declining mortgage rates and incentives from builders likely to draw potential buyers back into the housing market. Here are the details.
In a positive sign for a U.S. housing market hammered by higher interest rates, data out Thursday from the Commerce Department showed a surge in home building last month. Single-family housing starts jumped 18% in November to a high not seen in more than a year and a half, and momentum could continue. Mild temperatures and dry weather likely helped construction, with home building soaring in the Northeast, Midwest, and the densely populated South. Another boost likely came from declining mortgage rates. The popular 30-year fixed mortgage averaged 6.95% last week, the lowest level since August. It has tumbled from a 23-year high of 7.79% in late October. At the same time, supplies of previously owned homes are tight, helping spur demand for new construction. Permits for future construction jumped to their highest level since May of 2022. The Federal Reserve held interest rates steady last week and signaled that the historic tightening of monetary policy over the last 2 years is nearing its end, with lower borrowing costs coming in 2024. Economists have raised their fourth quarter gross domestic product growth estimates, predicting that the housing market will help the economy avoid a recession next year.
And thank you so much for watching NTD Business. That's all the stories we have for you today. We'll see you soon.